Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Tuesday, the 4th of March, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual regular run through in here today. It'll be fairly brief in here, although there's kind of a lot going on geopolitically. There's not too much changing really with respect to data on the data side, and not much coming through. And there's not too much to focus on with regard to the charts, in that they remain very bearish and negative. So, but we will run through everything we need to run through. As you know, I've been saying, I don't know how many of you were around on Trump's last term, but what tended to happen back then was data completely starts to take a side seat in the day-to-day trading, particularly in the long run. Obviously, data is important because then it tells us how the economy is going. So for long-term investing, we're relying on the data, but day to day and week to week, markets move more on the geopolitical shifts, and that's exactly what we're been seeing really in here since Trump's inauguration, really, and really accelerated in the last few weeks. A lot of negativity coming through on tariffs, a lot of negativity coming through on the geopolitical stage with respect to concerns around Russia, Ukraine, to a lesser extent Gaza, and all of this, and now Iran as well, which has been thrown in the mix. So all of that in here causes at least short-term volatility, and also slightly longer-term, intermediate-term volatility to increase. And that's what we're kind of focused here at Trade Day. So data kind of, even if we get a really good piece of data, yes, it can move markets within the day, but it can get overshadowed by the bigger picture bigger picture fundamental risks that are impacting markets. And that's what's been happening. We do get Fed Williams is speaking today at 2:20 Eastern. I don't know if it's a speaking engagement or not with Q&A, but there may be questions around what's going on the geopolitical sphere. Obviously, that's not the Fed's remit, but obviously it impacts the economy. So it kind of does fall a little bit within the remit in here. So that's the only real thing. Remember, this week we do, I pointed out yesterday that this is the last week of Fed speakers. So we're up here. March 25, the meeting 18th and 19th, with the decision coming on the 19th, a week and a half before. This Saturday, the 8th, we will go into the blackout period. So we only have the balance of this week in here, today through Friday, where Fed speakers will be speaking. So we do get Williams speaking today at 2:20. The other thing, I'm not sure what this speaking event is in here. I mean, Trump is obviously very active all the time anyway, with impromptu engagements or press engagements. Plus, he is active obviously on various social media channels, so he can make his voice heard whenever he wants. But I'm not sure exactly what this is. It says White House release in here. I'm not sure what that is at 9 o'clock this evening. So Trump is due to make some kind of address at 9 o'clock this evening. Let me just quickly use our friend Google. So that's at 2100 ET. What's the day? Tuesday, 4th March. Let's see if there's anything on here. Oh, he's speaking to Congress. Oh, okay. So it's 9 o'clock Eastern to Congress. Okay. He's addressing Congress. Okay, so that's going to be significant. All right, I'm pretty much sure there's going to be no Q&A or anything. Got to remember that one with Pelosi. Okay, yeah, he's addressing Congress, so that's going to be important, right? I don't know, but I think. Okay, what time is it? How to watch? It's not a State of the Union address. I'm pretty sure there's not like any kind of Q&A. So, but nevertheless, let's see what he's got to say. So that's 9 o'clock tonight. We've already spoken about the Fed Watch tool. So overnight in here, if we take a look at the morning briefing America, yesterday's dominated by the tariffs kicking in and tit for tat going on as we kind of expected. So no surprises really. China and Canada strike back as Trump's tariffs kick in. And so, so that's obviously a negative. China imposing levies of up to 50% on American agricultural goods, banned exports to some defense companies. Canada also retaliated, putting tariffs on $107 billion of US products. So that's obviously not positive. And more pressure on Ukrainian President Zelensky. Trump working with Putin to help broker talks with Iran. So there's another moving part to this kind of very confusing situation we have at the moment, with Europe doing one thing, US doing another thing, Zelensky saying another thing, and now talks between the US and Russia regarding Iran. So another moving part in here to this very difficult situation. So that's going to continue to dominate markets. Any developments on that, any developments on tariffs as well, given what's going on with the EU, with peacekeeping potential, and maybe Trump's not happy with what's going on with the EU as well. Potential now, tariff. They've been spared tariffs at the moment. Who knows if that's coming? Probably coming at some point down the line. EU and UK. So all of this is front and center. So and it has to be monitored. And obviously, when you're day trading, all I can say is keep your stops. Make sure you have a stop in, because this market can just jump on one tweet from Trump or Vance or whoever it might be. European stocks down. Oil as well, tariffs kicking in, euro gains as US proposes lending of 150 billion for defence. And then there it is there. I could have just gone to the next tab. There you go. Look, focus turned to Trump's address to Congress later Tuesday. There's going to be a lot of focus on that. So 9 p.m. Eastern tonight. Trump escalates global trade war, sparking tic-tac tariffs. We've already spoken about that. New Trump tariffs take effect. EU also in crosshairs. I mentioned that, potentially. EU next, been spared so far. Investors say it's time to take Trump seriously as markets recoil. So Trump trade in reverse. So the Trump trade, being reversed, the positive Trump trade on more of a risk-on environment, now switching the other way. The Trump trade was dollar strength, now dollar down. And US Treasury is going bid, so up in price, down in yields. So it's kind of the reverse of what we're seeing after the Trump win back in November last year. The Trump trade was very risk on, so traders willing to take more risk. So equities up, bonds down, and now we're seeing dollar up. Now we're seeing the reversal of the whole Trump trade. So concerns around the economy, and not just the US economy, the global economy. Stocks and bond yields slip as Trump tariffs ignite new trade conflicts. So all the same stuff in here. Futures, actually, US futures are kind of little change, slightly lower, but they kind of had a bounce and rolled back over. So looking kind of negative as we go into the day today, with European stocks certainly down. So we'll take a look at that in a second. And then gold up, gold rallying on the back of coast back up, moving back towards record highs from late February. As a safe haven, and that's why bonds are up as well, up in price, down in yields. Asian stocks, Nikkei following US down overnight, 1.2% down. Hang Seng only down just over 0.25%. European stocks really getting hit this morning. So German DAX down 2.25%, French CAC down 1.3%, FTSE's nearly 0.5% down as well. But US futures kind of more muted in here, so between 0.1% and 0.2% down for the S&P and the Nasdaq. But when we come to the chart, you'll see it certainly looks very negative. I just thought I'd highlight this from a kind of different perspective. So this is a historical. So you go over here on the CME FedWatch tool, historical data over here on the left-hand side. You click this tab here, and I've singled out June, so the 18th of June meeting. And what we're seeing here is this move lower since basically the middle of February. So this is the percentage chance of the rates being 425 to 450, which is where they are now. So the market at one point was pricing in, very little chance of a rate cut by June. We've got worse anticipation, moving up to here like 66% chance that rates in June will still be unchanged. Okay, where they are now, and you can see how it's collapsed in here since the middle of February. So in 2/3 weeks, we're now moved down to now only a 20% chance of that unchanged. So the market now pricing in, almost certainly by the summer we're going to get one rate cut by June, having priced in maybe more likely to not have a rate cut only a couple of weeks ago. So that shows the turn that we're seeing, and that's around concerns both on the bigger picture, the geopolitical risk, the global picture, but also concerns now of a slowdown in the US being driven by all of this, by the trade war, being driven by global geopolitical tensions. All of that adds up to a potential negative for the US as well. So, potential a slowdown. Certainly, this consumer seems to be slowing down. Potential slowdown in the economy, and that potential even a recession. So, kind of this is going against what kind of Trump wants. Bigger picture. He's supposed to be pro economy, pro business, and the market now kind of pricing in risk that we're going to go towards maybe recession. If we look at yields in here, you'll see yields in here getting close to this importance. This is the 10-year yield. So this is from June of last year. We get this swing in here at 413. We pierced that today. Significant activity below 413 would open up even lower yields. So that's lower yields, higher prices. And we see on the bonds in here, the market continuing higher, 30-year yields up, 10-year yields continue to go higher. There's the equivalent level on the futures, 111.22 and a half in here on the June contract. Above there is the equivalent level to what we're looking at here in yield. So this 413 level in here on yield, this is the equivalent level. So above there on the futures market would trigger a potentially higher prices, lower yields. And it's not just at the long end, which is a reflection of the concerns around the economy. It's at the short end as well, which is obviously reflecting what we looked at here on the FedWatch tool of a potential for more aggressive interest rate increases. So that's reflecting the short end of the curve at the 2-year. But equity markets having rebounded, fouled ahead of some important resistance levels above the S&P and NASDAQ, which I'll look at shortly, and heading back towards recent lows. So real risk of a bearish extension here, having created these bigger potential topping patterns in here on the NASDAQ. Not quite there on the S&P, but we're going to focus on that now. So if you look at the S&P on the 30-minute, these are these peaks in here that I highlighted yesterday, saying, maybe if after the PMI data we got above these peaks, which were around, we were at like 6015, 6015, 6024. Above there would have signaled a potential base. We were pushing up that way. But obviously, post just not only the data, but then obviously the negative aspects of the geopolitical tensions, the tariffs, plus the everything else going on the geopolitics in here, sent the market sliding before we could take out those levels, making new lows yesterday. And despite the rebound overnight, look, we're back down towards those lows, so getting close to those lows. Critically on the S&P is that swing low there. That's from the 13th of January. That's the low for the year. That low for the year is coming in at 58.09. Down through there today will then potentially signal at least a move down to this next swing low here, 57.84, and below there would be really negative for a bigger top on the S&P. The Nasdaq similarly didn't get. We were a long way from these peaks up here that we flagged. We also flagged this little level in here, which was around 21,165. We failed just below there, made a new low, and making new lows even now, right? So look, failed on the overnight and then making new lows. So looking vulnerable. And on the Nasdaq, we've already taken out all these lows for the year. And now this is the next kind of support area of importance. This low here from back in October, end of October. So this is pre-Trump pre-Trump's victory in here. So the whole of the the Nasdaq now giving up everything from the Trump win, and the S&P I think pretty similar in here. Where's the Trump victory? Is back here now. So down through here will be giving back all the gains post-Trump in here. So these levels in here. So the lows here. 2248, 20 basically below 2248, 24875 is the level. Down through there would open up quickly down to this low here, which is 20,025. So those are the lines in the sand on the downside for potential breaking lower on the Nasdaq today. So market's still looking vulnerable, potential still more downside going into the day. And I don't really see right now, with no data on the horizon, Trump speaking later tonight, I don't really see at the moment where the positives are going to come that are going to switch this around. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow with another Bull versus Bear webinar.